National Australia Bank's results disappoint, highlighting the conundrum for the sector. Big corporates are paying more tax than ever, and Aussie living standards take a tumble. Welcome to Fear and Greed Business News, Australia's best business podcast. It's Friday, the 10th of November 2023. I'm Adam Lang, and good morning, Sean Aylmer.
Good morning, Adam.
Sean, immediately after the show, we want everyone to stay listening for your chat with Ian Percy. He's the founder of Artemis Technologies.
Yeah, it sure is. Interesting chap, Ian. He actually won gold medals sailing initially in the Sydney Olympics and a couple of Olympics after that. He's basically taking the knowledge he has in sailing and applying it to marine manufacturing. He basically wants to electrify fleets, or the ferries we use, the motorboats, the carriers. He wants to make them EVs. It is a really fascinating chat.
Fantastic. Sean, the main story this morning, NAB, the country's second largest bank, has lifted its cash profit by 9% to $7.7 billion, but boss Ross McEwan warned competition is intense.
And that's eroding the benefits from higher interest rates. Banks normally do better as rates rise, but the mortgage market in particular is very competitive. To preserve profit margins, National Australia Bank is upping its focus on lending to business customers. Now, NAB is already the largest business lending bank in the country. McEwan said the bank will not chase home loans at any cost. Similar story to the Commonwealth Bank. Mind you, National Australia Bank is still winning about 85 to 90% of customers that are rolling off fixed rate loans. The result announced yesterday suggests the second half of the year ending September was tougher than the first half. The all-important net interest margin, the difference between what the bank receives on loans and pays out on deposits, was up 9 basis points. That's good news, though it was a bit tighter in the second half. Hence, National Australia Bank's share price closed down 1%.
Sean, so we had Commonwealth Bank's result 3 months ago. Now we've had Westpac and NAB. ANZ is next week. How healthy is the banking sector?
It's an important question for investors, given 4 of the top 6 companies on the ASX are banks, and if you throw in Macquarie, 5 of the top 8 companies are financials. The jump in interest rates started in May last year, boosted income pretty quickly. That meant the first 6 months of the most recent year, that's the year to September, let's say, were pretty good. Then competition kicked in the second half, so it's kind of that April through to September period. Well, things just got a bit slower. Banks and customers do better when the economy is doing better, and the economy is definitely slowing, though probably not enough to cause a recession. At least loan arrears remain contained, and there hasn't been a dramatic increase in customers under duress. That's very good news for the banks. The ASX 200 Banks Index, of which the Big Four are a major part, is down 4% over the past year, though the overall index is flat. So it does show that the major banks have underperformed the rest of the index. I think the jury's out on exactly what's going to happen to the banks over the next 2, 3, 4 quarters.
Sean, alongside the banks, how did the local markets perform yesterday?
The S&P ASX 200 closed up 20 points to finish at 7,015 points. That's the highest close in almost 3 weeks. First time in about 3 weeks that we've actually closed above 7,000 points. The banks were mixed. Westpac went ex-dividend. Its share price was down 2%. Commonwealth Bank was up 1.4%. We mentioned a moment ago National Australia Bank was down 1%. The big miners outperformed, so too Aristocrat Leisure. Newmont fell 4%, while WiseTech Global was off 2.4%. A few interesting bits and pieces yesterday. Origin Energy's share price rose more than 2% to close at $8.93 a share after a second proxy advisor, CGI Glass Lewis, said it will recommend shareholder support for the Brookfield EIG bid at $9.53 a share. Remember, AusSuper is holding out at this point, but most of the others seem to be supporting the bid. Explosives manufacturer Orica released its full-year result. Net profit was up 16%. That pushed its share price up more than 2%. Casino company Star Entertainment avoided a second strike after a feisty annual meeting, which saw shareholders vent their frustration at the collapse of the company's share price in the face of a raft of action by gaming regulators and AUSTRAC, that's the anti-money laundering agency. The Star share price now is not far off 20% what it was a year ago. Quite a tumble. A few others around. Challenger's share price rose after it said it was expanding its agreement with Apollo Global Management. Buy now, pay later group Zipco jumped on expectations it will deliver positive cash earnings in fiscal 2024. And bond yields, Adam, well, they've been falling ever since the Reserve Bank's decision on interest rates on Tuesday. Basically, the market's taken the view that maybe there won't be any more rate hikes. That, of course, does help equities.
Sean, that is an excellent local market update. Now take us global. What's happening in international markets?
Still plenty of pressure on oil prices, with Brent crude falling below $80 a barrel for the first time since July. Gold prices were up slightly, while iron ore prices were also a bit higher. The Aussie dollar's trading around 64 US cents. Bitcoin's now heading towards $37,000 a unit. In economic news, inflation figures from China show a slight decline. Yes, prices went down last month compared to September.
Sean, we'll be back in a moment with the rest of the day's business news. Sean, big corporates are paying more tax, and BHP and Rio Tinto combined paid a quarter of all corporate income tax, worth about $20 billion in the 2022 financial year. That is staggering.
Yeah, it's a lot of money. So that 2021-22 corporate tax transparency report from the ATO that was released yesterday says BHP paid $9.5 billion in tax. Rio paid $9.1 billion. Next was the other big iron ore miner, Fortescue Metals Group. It paid $3.6 billion. Now, Commonwealth Bank led the banks ahead of Westpac, National Australia Bank and ANZ. Also among the top 20 payers were Wesfarmers, South32 and Telstra. The report shows that Qantas paid no tax from $9.3 billion in revenue in that period. That was the COVID period, of course. Overall, though, there was a 22% increase in corporate income tax paid. That's pretty good.
Sean, would you say it's a risk to have three companies paying 1/4 of all corporate income tax?
It's either a risk or commodity prices went through the roof, and so it was kind of circumstances led to that. But we still very much rely, as a country, we rely on the tax take from the mining industry as a whole and from the financial industry as a whole. But we are overly reliant on those companies.
Right. Sean, moving on to the federal government, they'll conduct a review of what happened at Optus on Wednesday as the beleaguered carrier faces a flood of compensation claims from businesses and consumers.
Communications Minister Michelle Rowland said Canberra will undertake a public review into the meltdown alongside an investigation by the Australian Communications and Media Authority. The reviews will include Optus's handling of the outages. The government, through Assistant Treasurer Stephen Jones, has also said compensation must be on the table for affected Optus customers, particularly small business customers. ACMA's review is focused on Optus' failure to keep providing access to O, which is probably a breach of its obligations, and focus will also fall on whether it's fallen foul of executives and board responsibilities under new critical infrastructure rules. Optus again apologised yesterday, still not quite sure what caused it.
Sean, Australian households have suffered the largest fall in living standards of any advanced economy over the past year, hit by high inflation, a rapid increase in mortgage repayments and rising income taxes.
Inflation-adjusted disposable incomes have hit their lowest level since June 2019, according to newly released data from the OECD and reported in the Financial Review. The figures demonstrate the political challenge facing the Albanese government, as polling shows the rapid rise in the cost of living has become the single most important issue for voters. In the 12 months to June, Australian household incomes fell 5.1%. That was the sharpest fall recorded across the OECD. The outcome was very much in contrast to the OECD as a whole, where living standards increased 2.6%. Countries like United States, United Kingdom, France all recorded real income gains.
Sean, those international benchmarks I find really interesting.
Yeah, I agree. I mean, there's always devil in the detail, but just from a high level perspective, it just does show how Australia, in a real income sense, has totally underperformed over the last 12 months.
Yeah. Sean, Scentre Group, which owns all the Westfield malls in Australia, has been able to push through higher rents, even though sales in the shopping centres are lower.
It's an interesting sector. Mall owners nowadays try to make their properties destinations rather than just shopping centres. So Scentre, for example, has recently increased tie-ups with Disney and with Netball Australia. It is getting foot traffic through the door. Scentre Chief Executive Elliot Rusanow said so far this year, Westfield malls have welcomed 410 million customers, 28 million more than the same period last year. But sales growth across the stores in Westfield centres was down 3.2%. Now, what Centre's been able to do is boost the rents it charges when new leases are signed. So average rents have risen by 7.6%. Maybe that's not great news for specialty retailers, but it's good for Scentre Group shareholders.
Sean, accounting software group Xero's share price tumbled 13% yesterday after it reported a $50 million net profit for the September half.
13%, Adam. Ouch.
It's a big hit.
Yeah, it is a big hit. A few things in the result analysts didn't particularly like, including a fourth consecutive decline in the subscriber growth rate. Revenue was up, but the bottom line was actually lower than expected. Relatively new chief executive Sukhinder Singh Cassidy was upbeat about the result, focusing on the fact that the group at least made a profit. It didn't do that 12 months earlier. Taking over from former chief executive Steve Vamos in February, Singh Cassidy has reduced Xero's headcount by about 15%. She's pledged to keep a lid on costs while focusing on growing the company's core accounting business.
Sean, fast charging company Tritium will close its Brisbane factory and consolidate its operations in Tennessee in the USA in an effort to avoid bankruptcy.
Tritium has been trying to win state and or federal government support for months, having admitted that its initial public offering just didn't raise enough money, basically. Boss Jane Hunter a few weeks back warned that there was a risk of shutting the Brisbane factory at a cost of 400 jobs. Now that's happened. She said the group was searching for a strategic investor. Tritium said it would keep its 200-strong research and development team and testing facilities in Brisbane. That's good news. Now, it listed on NASDAQ with a $2 billion valuation in 2021, a so-called double unicorn, $2 billion. It's just struggled since then. It's really struggled to raise capital. Its value is now $33 million US. That is quite the slump. Last month, the NASDAQ issued Tritium with a show cause notice after its shares spent more than 30 days valued under $1. They're currently, I think they're around 56 cents or something like that at the moment.
Sean, in international news, efforts by Qatar and Egypt to negotiate a deal with Hamas leaders to release up to 15 Israeli hostages in exchange for a 48-hour pause have stalled.
Both countries have already secured the approval from Hamas to release the hostages, including 6 Americans, but they've failed to get assurances from the US and Israel to accept a humanitarian pause of the current fighting in Gaza, according to a senior Egyptian official. Israeli Prime Minister Benjamin Netanyahu has said there can be no ceasefire in Gaza without the release of hostages. A senior Israeli official told the Wall Street Journal that localized tactical pauses are now under consideration to boost the flow of humanitarian aid and allow the movement of civilians, adding that a full pause would only occur to allow the release of hostages. Hamas is holding more than 200 people.
Sean, last story. After 118 days, the Hollywood actors' strike appears to be over. It ends the longest ever actors' strike and follows the end of the writers' strike in September, which lasted for 5 months.
About time. The negotiating committee of the union that represents thousands of actors has reached a tentative agreement on a new 3-year contract with major studios represented by the Alliance of Motion Picture and Television Producers. The 2 strikes had a crippling effect on Hollywood's movie and television production, but it's also estimated to have cost the Southern Californian economy about 10 billion Aussie dollars, $6.5 billion US. The proposed new actors contract is expected to boost minimum pay, residual payments for shows streamed online, and healthcare funding. It's also believed to include rules that guarantee studios will not use artificial intelligence to create digital replicas of actors without payment or approval.
Sean, up next is your Fear and Greed daily interview with Ian Percy, the founder of Artemis Technologies.
All about greenifying. Is there such a word as greenifying, Adam?
Let's go with it. I don't think it is, but can't you have contenders for the Webster's Dictionary?
Yeah. So greenifying the maritime sector. So getting all those boats, the ferries, all that, making them electric. It's a really fascinating chat. It's not something that Australia is very good at this point, but Artemis has come up with some technology, which, certainly is very promising anyway.
That's up next in the Fear and Greed playlist on your favourite podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Adam.
It's Friday, the 10th of November, 2023. Make sure you're following the podcast and join us online on LinkedIn, Instagram, X and Facebook. We hope you have a great day.